Hi everyone, this is James Hartland, the co-founder of Astra Worldwide. And today on this podcast, we're going to be talking about tax, which probably is a good thing to consider as we're at the beginning of 2026, and the increasing use of US trusts for expats and international expats working and living abroad. So many of you may have heard of what we call the CRS, or the Common Reporting Standard, which is a system in place around the world where countries exchange information on financial assets that their citizens may have or their foreign citizens may have with other countries that ask for this information. And this is all part of a strategy in the world that has developed over the last 10 years, which also includes FATCA, which is where, again, the world shares information with America so that America can keep a track of its international citizens and of people who are American who do business and are based in America. The CRS, though, is slightly different, as it's a two-way strategy for exchanging information between different countries, whereas with FATCA, it only works one way, which is back towards the US. Why is the CRS relevant, though, for expatriates and international people? Is the reality that 20, 30 years or more ago, we all were aware of offshore tax jurisdictions like the Isle of Man, the Channel Islands, Gibraltar, the Virgin Islands, the Cayman Islands, and places also like Labuan in Malaysia. So 20, 30 years ago, these areas were very popular for expats where they would do their offshore banking and they would be able to get interest on their banks or investments, and this was tax-free. With these jurisdictions now being part of the CRS, they have continued to do well, but they have not been so popular. And now financial advisors like ourselves at Astra Worldwide and other financial institutions have been beginning to use trusts in the US. And there are many reasons for this. Perhaps the one that most interests people is confidentiality. So let's say you're a European citizen working in the Philippines or Vietnam or the UAE or China. You can open a US trust and place your investments and cash into that in the knowledge that the US does not report financial affairs held by foreigners to other countries. So while the CRS works on the exchange of information between different countries, strangely enough, the Americans who were the architects of CRS do not actually comply with CRS. So what that means is that if you're a Brit or a UAE national or a European or an Australian or an Asian and you hold assets in a US trust or a US company, those assets cannot be declared to the country of your birth. Clearly, for many people, this is interesting, especially if you're an international person and you want confidentiality with regard to your financial affairs. So let's say if you're an expat living in Singapore, maybe you're married and you and your spouse come from different backgrounds. So opening a US trust enables you to settle your assets into that trust, keep them confidential from both your background and your spouse's background. Also, the country which you're currently living in will have no idea of those assets because they will not be reported back to Singapore by the US government. And this can give you a degree of security and protection that cannot happen by using the more traditional offshore havens which people used to use in the past, which we've already discussed. So In 2026, Astra Worldwide are opening a new tax advice service, which is based on cross-border tax advice. Our goal is basically not to help clients to illegally avoid tax, but by having one-to-one conversations with you to help you basically minimize your tax by clever tax planning based on your circumstances. So we're really excited to put together this new tax offering. And for those with complex tax affairs, you can visit our webpage where we have details of the packages that we offer. So thanks for tuning in. And if any of you have questions about your tax situation, please book a meeting with us and I'll look forward to speaking with you then. Bye for now.